Todd Rosenbluth. Before we look ahead to Q1 2014, let's wrap up earnings for Q4 2013. We had earnings growth of around 8%. Pretty good. What were the drivers?
Yeah, I mean, we really saw corporate earnings really improve during the whole year of 2013. So we hit record quarters as we moved throughout it. You mentioned 8%. We saw a number of sectors do very well. In fact, all but utilities really did very well during the time period. You know, materials is one of the leaders within that group.
Now, do you want to stick with materials going into this year as well?
So, you know, we think materials is still going to have a good year, you know, but the Q4, as you mentioned, was one of the strongest. It was actually the strongest of the sectors where there wasn't any noise in the underlying data. Chemicals companies did very well. Paper and forest products did very well. It's really tied in with the economy. So if you think the economy is going to do well, then an ETF such as materials sector, SPDR, is a good way to get exposure to that.
And then financials also did well in Q4 2013. But it was the insurers that did the best, right?
Yeah, so the insurance companies were the leaders within that group. Diversified financial services also did well. Capital markets only saw about 1% earnings growth. So we really saw a pickup on some of the larger sub-industries. And again, there's ETFs that are tied to it. The SPDR insurance ETF, KIE, is a good way to get exposure to that one.
And then looking ahead to Q1 2014, you like the retailers. But how could you like this sector when there was so much noise there, especially with the weather? No one went out in the first quarter. I know I stayed in. I didn't shop. It was cold out there.
Well, what you may have done actually was use the internet to shop. And so internet retailers are actually one of the larger industries within, or sub-industries within the retail industry overall. And it's a large exposure to the SPDR S&P retail ETF that's out there. We think that's a good way to get exposure. We also think that these companies are cutting costs and are going to help things. So we're actually going to see stronger growth within consumer discretionary than any other sector in the first quarter of 2014, according to Capital IQ consensus data.
All right. Thanks a lot, Todd, as always.
Thanks, Greg.
Thank you for watching The Street.